Did you know that the boring trash sitting on your curb every Tuesday is actually a multi-billion-dollar energy source? Most people look at a garbage truck and see a dirty, noisy necessity of urban life. And you've been giving it away for free your entire life. But for the world's most elite investors, those trucks represent something else entirely, a toll booth on the American economy that is extremely hard to bypass. Here is the jarring reality: while the tech sector fluctuates and retail trends die out, the average American produces around 4 pounds of trash every single day. That is roughly 1,600 to 1,800 pounds per year, per person. For one company, this isn't a waste problem, it is a massive, recurring revenue stream. In fact, this company has built such a dominant moat that they don't just dump trash anymore. They are one of the largest producers of landfill gas-based renewable natural gas in North America, literally turning your old leftovers into electricity and fuel. Quick note before we dive in: nothing in this video is financial advice. Always do your own research before investing. To understand how a company turns garbage into gold, we have to go back to 1968. The story began in Chicago, Illinois, when three men, Dean Buntrock, Wayne Huizenga, and Larry Beck, decided to consolidate the fragmented world of local waste collection. At the time, the industry was a mess of small, mom-and-pop haulers. But the founders had a vision for national scale. Buntrock and Huizenga were no strangers to the business. Huizenga came from a family with deep roots in hauling going back to the late 19th century. Using that deep-rooted industry knowledge, they began an aggressive acquisition spree. Just 3 years after their founding, in 1971, the company went public. That fresh capital was gasoline on the fire. In 1972 alone, they reportedly completed over 130 acquisitions, systematically buying up local competitors across the country. They weren't just picking up trash, they were systematically buying up every local competitor in sight. By 1982, they had officially become the largest waste disposal company in the world, surpassing $1 billion in annual sales. The company's relationship with the S&P 500 is a testament to its resilience and its status as a cornerstone of the American industrial complex. The company officially entered the S&P 500 index on July 31, 1981. At that time, it was recognized as the undisputed leader in environmental services. However, the journey wasn't without its hurdles. In the late 1990s, the company faced a significant internal crisis involving accounting irregularities from previous management. This led to a massive merger in 1998 with USA Waste Services Incorporated. While the Waste Management name was kept because of its incredible brand equity, the corporate structure was essentially rebuilt from the ground up, and the headquarters moved from Chicago to Houston, Texas. Despite these turbulent years and the massive restructuring of 1998, the company never left the S&P 500. While many other giants from the 1980s fell into obscurity or were delisted, this business remained a constant. This is a crucial point for investors. Even during a total corporate overhaul and a massive merger, the underlying business of picking up trash was so essential to the US economy that the S&P index never removed it. It has remained a constituent of the index for over 4 decades. So, how exactly does a trash company generate over $20 billion in annual revenue? It's all about vertical integration. They don't just pick up the trash, they own the entire life cycle of the waste. Their revenue is divided into several key segments. Collection: this is the bread and butter, making up about 55% of their revenue. Think of it like a subscription service for trash. They charge recurring fees to residential, commercial, and industrial customers. It is high margin, recurring, and incredibly sticky. Landfills: this is the ultimate moat. The company owns or operates over 250 landfills. In today's world, Getting a permit to build a new landfill is nearly impossible due to environmental regulations and, not in my backyard, NIMBY, sentiment. This makes their existing landfills irreplaceable assets. Other smaller haulers actually have to pay them tipping fees just to dump trash at their sites. Transfer stations. These act as consolidation hubs where small trucks dump waste to be loaded onto larger vehicles for the trip to the landfill, optimizing transportation costs. Recycling and renewable energy. This is the modern growth engine. They process millions of tons of recyclables and, more importantly, they capture the methane gas produced by decomposing trash to create renewable natural gas, RNG. Financially, the business is a powerhouse. In 2025, they reported revenues of roughly $25 billion. Their operating EBITDA margins are remarkably high for an industrial company, often hovering around 30%. Because they have immense pricing power, meaning they can raise prices to offset inflation, their cash flow is incredibly predictable. In the waste business, you don't have to worry about a new iPhone making your product obsolete. Trash is the one thing humans will always produce. No investment is without risk, and there are three main headwinds facing the company right now. First is leverage and debt. In 2024 and 2025, the company agreed to a major acquisition, a $7.2 billion deal for Stericycle, a leader in medical waste. As this transaction is financed and integrated, it will push their total debt-to-EBITDA ratio higher than historical norms. While the acquisition expands their reach into the lucrative healthcare market, the cost of servicing that debt in a higher interest rate environment is a valid concern for some analysts. Second is recycling commodity volatility. While green energy sounds great, the actual market for recycled paper, plastic, and metal is highly volatile. If the price of old corrugated containers, cardboard, drops globally, the profit margins in their recycling segment take a direct hit. In 2025, lower commodity prices actually acted as a drag on their total revenue growth. Finally, there is the regulatory risk. The push for zero waste and stricter EPA regulations on landfill emissions could force the company to spend billions in additional capital expenditures. If the government changes the incentives for renewable fuel standards, the massive investments they are making in renewable natural gas, RNG, might not deliver the 20% to 30% returns management is targeting. However, if you talk to the bulls, they will tell you this company is just getting started. The bull case is built on a transformative shift from a waste company to a sustainability giant. The biggest growth lever is renewable natural gas. By 2026, the company aims to have 20 RNG plants operational. They are on track to produce enough renewable gas to power their entire fleet of over 12,000 natural gas vehicles. This creates a closed-loop system where the trash they pick up becomes the fuel for the trucks that pick it up. This significantly lowers their operating costs and creates a new, high-margin revenue stream by selling excess gas to the grid. Furthermore, they are aggressively pursuing automation. In their recycling facilities, they are replacing manual sorting with optical sorters and AI-driven robotics. This isn't just a tech play, it's a margin play. By reducing labor costs and increasing the purity of their recycled materials, they are making a historically low-margin business much more profitable. Lastly, the Stericycle integration is expected to generate significant cost synergies, with management and analysts talking about hundreds of millions of dollars in annual savings. By moving into medical waste, they are entering a segment with even higher barriers to entry and higher pricing power than residential trash. Some projections put their free cash flow in the high $3 billion range by 2026, which would likely lead to massive dividend increases and share buybacks if it plays out. Bulls would argue that the higher debt from deals like Stericycle is being used to buy assets with even stronger pricing power and higher barriers to entry. In their view, that trade-off makes sense as long as cash flows keep growing faster than interest costs. In summary, this is a company that has transformed from a local 19th-century hauling service into a high-tech environmental powerhouse. They own the unreplicable assets of North American landfills, and they are successfully pivoting into the energy transition. While they face challenges with debt levels and commodity price swings, their toll-road business model and long history in the S&P 500 suggests they know how to weather a storm. Whether you see them as a boring utility or a secret energy play, one thing is certain: as long as people are consuming, this company will be there to collect. And as always, this breakdown is for education and entertainment only, not financial advice. Do your own research before making any investment decisions. Thank you for watching. If this breakdown on WM was helpful, tap like, hit subscribe, and comment which S&P 500 stock you want me to cover next.